We have a very exciting panel here tonight. We feel very fortunate that we have such distinguished guests. So I'll start by introducing myself, and then we'll just let each of the panelists introduce themselves. So my name is Yoav Leitersdorf. I'm the co-founder and managing partner of Wild Ventures. Wild Ventures is an early stage, seed stage, mostly cybersecurity focused, but also automotive and a couple of other cool areas. Venture capital fund. I'm based in Silicon Valley, as well as some of the panelists over here. And I have a great team here in Israel. Also, I have with me one of my team members in Silicon Valley. John, are you here? John is here somewhere. Everybody else at Wild Ventures Israel, Ofer, Irene, Sharon, everybody raise your hands so that people know where you are. There are about a dozen of us, which is shocking, given that about a year ago it was just me and Ofer, or maybe 2 years ago it was just me and Ofer. Anyways, very happy to have all of you tonight, and this is not going to be about Wild Ventures, but more about our distinguished panelists. So, Beeler, let you start introducing yourself.
Well, first I will say thanks to Wild Ventures for putting this on, and thanks for inviting me. My name's Charles Beeler. I'm with a venture firm called Rally Ventures. I'm based in Silicon Valley. My partner Jeff's actually based in Minnesota. I'll come back to that in a second. We have two funds. They're each about $100 million. We focus exclusively on enterprise technology. So early stage, seed and A, across the board enterprise. About 25% ends up being in cybersecurity. We cover the entire United States. So about half our investments are in the Bay Area. But between Jeff and also me traveling around, we really cover a broader range of what we see as really interesting opportunities across the United States. And we think it's important because I live in Silicon Valley, I love it, but it is always in a massive bubble. Sometimes a valuation bubble, sometimes a reality bubble. And what we find is by looking for interesting opportunities around the rest of the United States, you can find equally as compelling companies that frankly structurally are more interesting from an investor's perspective. So I've been doing this for about 20 years, always in that area, and I think the next 10 years, frankly, is going to be the most interesting 10 years of the time I've spent in it.
Chris Thomas.
I'm Chris Thomas. I wish I would have wore a different color blazer, but here we are. And so I'm a founder and a partner with a firm called Fontinalis. We invest uniquely in what we call next generation mobility, so the movement of goods, people, and services empowered by technology around the globe. We have about 40 companies in our portfolio, either technologies or entrepreneurs that are focused on road, rail, bike, air, autonomous air, land, and sea, and then empowering technologies like AI, big data analytics, holistic robotics. I sit on the board of two of our companies. Actually, I sit on one with Yoav Karamba Security here in Israel, and another, Nutonomy, kind of the premier full-stack autonomous platform based between Boston and Singapore. Based in Detroit, Michigan, one office in Boston, currently deploying out of a $100 million fund. Stage agnostic. We do everything from seed stage to pre-IPO secondaries. Geographically agnostic. We travel quite a lot. In Detroit, you might ask why Detroit? The largest transportation technology ecosystem in the world. A tremendous amount of great people that are looking for innovation, which we'll talk about a little bit later. And love my city, love my state, and excited to be here with all of you. Thank you.
Brandon Hannigan.
Hello, my name is Brendan Hannigan, and I am what's called at Polaris a partner entrepreneur. Polaris is a venture fund which has been around since late 90s. Our current fund is a $430 million fund, primarily focused on enterprise technology and life sciences / healthcare technology. Invests at multiple stages. Typically, seed will be done with people that the company has worked with before, entrepreneurs that the company knows, but then will be involved in A, Bs, and some expansion as well. My own focus is on primarily cybersecurity and cloud-related / AI technologies. So for how I get involved with Polaris is I will help invest, but then actually also help more actively operate the company, because previous to being with Polaris, I actually had two companies which Polaris invested in. One of those companies was a security intelligence and analytics company, which we sold to IBM in 2011, which was a very nice exit. I ran IBM security for 4.5 years, so I operated a very large security business, became a $2 billion business while I ran it. And then prior to that, I myself started out as an engineer building switches and routers when people used to build those things.
Alex Dole.
Thanks, y'all. I'm Alex Dahl. I'm the founder of 1011 Ventures. 1011's the industry's original fund that's our entire mission is cybersecurity. So cybersecurity has been a good area of investment for venture and private for a long time. In 2015, we started the industry's fund that's solely dedicated to cyber. So $100 million fund. We also invest globally. We are a third in Silicon Valley. I'm based in Silicon Valley. My partner's in Cambridge, Massachusetts. We do a third on sort of the rest of North America, not Silicon Valley, and a third in rest of world, which practically means places you can get to from San Francisco and Boston. So Tel Aviv, London are high on the list. We have 4 of our 11 investments are in the UK or Israel. Mentioning a couple, we've done 2 investments with Weil Ventures, both Hexadite, and Brendan and Rally are both, you got half the Hexadite board here. Sorry, half the Twistlock board here. And we also did Hexadite, which was sold to Microsoft during the year. So a couple of our Israeli investments that we've done. We have a partnership also a little bit uniquely with KKR, one of the world's largest private equity firms, where when we work on larger projects that are check sizes, sort of 20, 50, 100 million sorts of things, we end up getting involved with them. We're sort of a security research overlay arm for anything that has to do with cyber and plug into their investment vehicles. We've done companies like Darktrace, Ping Identity, and even Optiv Security, which was a very large transaction. And we do things all the way down to seed stage, so very early stuff. Learned the security business from the time I was an entrepreneur with PGP, one of the co-founders of Pretty Good Privacy. We were a secure email company from 2002 to 2010. We sold it to Symantec and been doing security for 15 years.
That's great. So I just want to let everybody know that as a co-investor with each one of the gentlemen on the panel, I can't recommend them enough. And actually, that's part of why we invited them to this panel. Is about a third of this panel we're going to talk about the value add of great board members, great investors, and the dynamics with the entrepreneurs. And that's a topic that we picked specifically because we saw these fine men in action, and I would love to share some of their stories. So what are some of the, everybody says, a lot of people say, I'm a value add investor. I really help my companies. I'm a great board member. Can you guys share with this audience what you think a value add investor is? What do you think a great board member to the entrepreneur is? And if you have examples that you want to share with us, personal examples, please do.
So, and laughing, we're out raising our third fund, and the phrase value-add investor is something that everybody uses. So, trying to explain it, and frankly, and Yoav just said it, we've only done one deal together, but have really loved doing it and had a chance to observe 2 of the other people here on boards. And I can tell you, I know what a value-add investor looks like when I see them, and I get to see them frequently. I wish more of the industry were that way, frankly. The way we look at it is in a few ways. First of all, we're backing entrepreneurs. We're backing, in our view, we're looking for people who have a great idea, passionate about an idea, ideally in a market that they already know. So they're coming in and telling us why it's interesting. We're not identifying a space and then going to pick a company. We're looking for really smart people who say, I've been doing this for 15 years, and lo and behold, this came along, whether it's AI or whatever. Here's a new way to do it, and here's why I'm going to make that happen. And so our goal really is not to drive their vision. Our goal is to help them make that vision a reality. And so increasingly what we've seen is the risk at the early stage is not about technology. There's a huge technology risk, but it's borne increasingly by the entrepreneurs. The risk is really more of a go-to-market risk. And you maybe can go get your first few customers, but does the company actually understand how challenging it is to go from a couple customers to $1 million in revenue to 10 to 100 and beyond? And every step of that, it requires different skills, requires sometimes different people. So for us, for value add, we spend a lot of our time focused around go-to-market, both my partner Jeff and I, but more importantly, a group that we brought in, it's now over 100 individuals They're all personal investors in the fund. We call them our tech partners. And they really run the gamut. So, we've got the CIO of Google and the head of corporate development at Microsoft and multiple CEOs, a number of founders, and people who've played pretty much every key role in a startup over the course of their careers. And the goal with those people is to bring them in to have them really work with the companies to add value. Because we understand there's only so much we can do. We need a broader set of folks who can come in and truly add value to the companies and identify with each company uniquely what is it that they need, what is it that they're specifically looking for that we can bring to the table. So, it's frankly a 45-minute answer that you could give on this, so I'll let other people touch other pieces of it.
Yeah, I would just say it's a board member that actually takes action to bring disparate value. And what I mean by that is if you're just bringing just capital, I would offer that's not enough. You need to bring sector expertise, you need to bring channels. I like to think of myself as an extension of my companies from a sales, business development, and marketing perspective. How can I actually bring real things to bear? So whether I'm right seating on a sales call, whether I'm working on an acquisition opportunity, whether I'm forming the syndicate for the next round, whether we're thinking about who our hire should be and what our biggest hire that we're missing right now, you have to be very active and just make sure that you're bringing things to bear and not overly engaging with your CEOs. They have to run the company. You want your C-level guys to run. But how can you act as an extension of what they're doing and make their job easier? Make them get there faster than they would otherwise get there.
I would just say as well for entrepreneurs, the most important thing is that when it's like when you're really good at hiring people into your team. And you spend a lot of time looking at their background, interviewing them, making sure there's a chemistry fit, making sure they bring what you need at that time. So at different stages of a company, you actually need different skills. And around the board, you actually need a complement of skills, not all of the same people. And so you got to look at the people you're dealing with and that you want to partner with. And that's the way you have to look at your board members and your investors in the ideal scenario. And when you have a good opportunity, good chance, you look at the background of the people, you make sure you're essentially having a co-interview together as to whether or not you want to engage with them. Differences, have they actually helped you at different stages? I got to tell you, I've seen experiences, now my own experiences of the boards, that my boards we've had amazingly supportive boards. I've seen boards from afar which have been catastrophic because basically between the CEO and two of the investors, neither of them had experiences growing companies before they were new investors. The CEO didn't have the experience, and quite honestly, collectively, they managed to just send a company into a horrific cash raising situations and put it in great peril. And then the real reality of what you need from a board is both experience and personality fit for the type of company you have. And you can only judge that, and certainly I look at that. I mean, life is too short. Ideas are great. I always say I want to have a great idea. And then the second thing is I want to work with just great people that I want to work with. I look forward to board meetings. I like working with the Twistlock team across the board. Otherwise, life is too short. You don't want to work with people you don't want to work with.
Yep, I think a lot of it was covered. Only a few other things I'd add. In cyber, a lot of the time, a great board member can sort of recognize the skills of the entrepreneur. And every entrepreneur, as they're hiring co-founders, should be broadening what they need for the company. You should think of your board the same way. Interview board members, run references on your board members. You just like we run references on entrepreneurs, it's very helpful. Hear from other people about it, but it should be additive. I think one of the characteristics I see on what I think Charles said down there. One when you see one. A good value-added board member is a lot of times has operating experience. So it's a venture capitalist today who has walked in the shoes that all of you are walking in as an entrepreneur. And that can be from multiple different areas. It can be a coder, it can be a CTO or an architect, it can be a VP of sales, it can be a CFO. I think there's something about being an entrepreneur yourself and having done it that allows you to relate faster. And being able to have shorter conversations, not longer ones, are all important things. Other things that just quickly that value-add investors do, introduce other investors. So, great example, Yoav did the seed and introduced us to Twistlock. We did the A and introduced Brendan to the B round. So, the introduction of other investors is a key thing that someone ought to be able to do who as a value-added partner. I also think in this area, as you think about both of our Israeli investments, if immediately wanted to come to the United States or Europe to set up, I think thinking about investors that can help you do that, if that's in your plan and it's the right thing for your business, it frequently is in cyber. Have they done it before? Have they brought someone to London, to Boston, to San Francisco, and ask them the pros and cons of the companies they've replatformed to San Francisco, Boston, New York, or London. There are pros and cons to all those. For an Israeli entrepreneur moving to those 4 cities, those are the kinds of things you should be able to, expect from a good investor.
I'd add one more thing, and it ties into what these guys just said. From both a value add, but also what do you want to look for in a board member? You want to look for someone who's going to be very straightforward and honest with you, even if it's not what you want to hear. Currently in Silicon Valley, I don't know, maybe it's happening here, there's been an ethos in the angel community around the entrepreneur's right, we're just here to cheer them on. Honestly, I think that's totally bullshit. I think it's a terrible thing, frankly, for the entrepreneurs. And as an entrepreneur, if you don't understand, I need other people. I need people who are willing to help me be successful. If you truly think I can go do it alone, I can tell you we're not a good investor for you. Because what we found is the investors, they may be confident, they may know everything about their market, but the ones who can come in and have very honest conversations about where they think they'll fall down without help, where they need help, and the ones who can listen to you when you say, I think you're going to have a challenge in, let's say, sales. You've never done it before. You don't know anything about it. That's fine. We can help you. If you can have those types of conversations, not always the easiest ones, before you raise money, you've gone a long way to figuring out how you're going to build a relationship with that investor going forward. You're not going to be friends with the nicest board member. You're going to end up developing a friendship with the ones who help you become successful. They may not always say what you want to hear, but you're going to look back on it and realize that the things they did say had a huge impact in the success of your business long term. And again, it's when I talk about value add, I talk about people I know are willing and comfortable to say things that they know won't be popular, but they think it's important and they know that the entrepreneurs need to hear it.
So I'm going to take this just a little bit further towards that direction and actually talk about friction. Try to bring that up and see if I can get some answers from you guys about, where are some of the friction areas between investors and entrepreneurs? What are the things that come up in the life of a startup where investors are sometimes not aligned with the entrepreneurs? What happens in those situations, and also how can we all avoid or work with these situations? Anybody want to take that?
Sure. Good. All right, I'll kick it off. I would say one big alignment issue that we find is, and it's a high-level problem, is when you have a company that's growing incredibly fast and you have a first-time entrepreneur, even a second-time entrepreneur, where the value of that company is just growing, exponentially, and then there's an acquisition offer that comes in. And it's an opportunity for a life-changing event for that entrepreneur. It's an opportunity to sell based on what that offer is. And they are looking at that as cash in hand, the opportunity to change their life and their family's life. You as an investor, especially if you're a subject matter expertise, you may know that there's 5, 10 more turns in that business. And you believe it to your bones that this could be something much, much bigger. And so at that moment, you talk about where is everyone aligned? We have, as a venture capitalist, we have 100 shots on goal. That entrepreneur might have 1. And so you have to have a very honest conversation around what's best for the business, what's best for the entrepreneur, what's best for the shareholders. And you're not always aligned at that moment. And so you have to the points you guys made earlier, which I totally agree with, at the outset, you want to make sure you're looking at that entrepreneur and the investor as people that are going to be working together for 7 years. Do you have the right personality? Do you have the right culture? Are you guys going to be aligned? And you're not always going to agree. When you disagree, that's a very good thing. But those are moments in which misalignment's very real, and you have to work through it as a team to do what's best for the company and what's best for everyone around the table.
I'd say a common area of friction is around go-to-market, especially with extraordinarily skilled entrepreneurs. That you have people, an amazing entrepreneur, especially in a very technical area, with just a couple of people can get 20 or 30 customers. We all can. Any of you in this room, probably with a good technical engineers, you make a few phone calls, you can get 20 or 30 customers. But a go-to-market operation, a beautiful go-to-market operation, is as sophisticated and as complex as developing a very complex application. And the people who know how to do it have similar skills as to what you may have if you are a technical entrepreneur. And that's where a lot of friction comes, and that's where a lot of companies fall down. And this gets to, you circle back to the other area, these conversations of getting the partners you need. which is people who can really, you know you're working with people who are in some ways and in some dimensions smarter than you, but we're not all smart in every possible dimension. And so in the dimensions where you're weak, you got to hire people and get people, or people on your board who are smarter than you, and then you got to know to listen to them. And so I would say, especially for technical entrepreneurs, be very mindful of go-to-market. That is a very complex thing, and that's where a lot of frictions happen. And quite honestly, where a lot of companies waste a ridiculous amount of time farting around because they didn't get people who knew what they were doing in the right spots.
Yeah, I'll throw out sort of related to that. I think marketing positioning or sort of an industry level marketing discussion is one that doesn't get enough attention early on. And I think a lot of entrepreneurs in tech early stage focuses on how something's going to work. What can I build? Can I make it work? Can I make it go faster? Speeds and feeds. And I think what ultimately to build a big business, you have to do that. But you then have to do that in a way that you have to be building towards something that's going to be sustainable and differentiated from everything else. And like in the area of cybersecurity, everybody asks about who are your direct competitors. And there's usually a handful of direct competitors. But the bigger threat to that company is that whole sort of early segment gets swiped from the side or above or below. And I think, the ability to understand sort of where your business is going to be growing into and what is sort of its ability to sustain when you become successful and you get 20 to 200 customers and you get 10 million in revenue and someone big starts looking at it and says, wow, that's sort of interesting. What do you have? What have you built in the last 2 years that's going to stop a big company with a lot of resources from coming at you? And I think that's an area that you have to think about early on, and you have to be able to articulate it. I, for one, like to challenge entrepreneurs to put it on a picture. If you can't draw, for me, sort of your sector and your industry map in a little sort of chessboard or a little war game on one page of paper or a whiteboard, I sort of like to see how the entrepreneur thinks about their direct market and sort of the substitutes in and around them. And I think that's a really important thing that a lot of times is overseen. And a technical founder typically doesn't want to spend time thinking about it. I think they want to go build the product and think about getting customers. They don't think about how do I get to 200 customers in a way that's going to allow me to sustain price points, sustain value, and be able to grow to 2,000 customers someday. And so I think that's an area to focus on earlier.
That's great, thank you. And we will open it up to audience questions soon. So please think about some really smart questions for our panelists. Let's talk a little bit about Israeli entrepreneurs. All of you invest in a lot of non-Israeli entrepreneurs, and you all invest in Israeli entrepreneurs as well. And we all know that Israeli entrepreneurs are a little different, sometimes in really good ways, sometimes in bad ways. What's your thinking about? What do you like about Israeli entrepreneurs? What are some things that you are cautious about or like a little bit less? And what mistakes have you seen Israeli entrepreneurs make? I know it's hard to generalize, but this could be very helpful to this audience if you can be honest about that.
Will I take that one? So I've experienced investing with an Israeli company, Twistlock, and then actually Amit is here somewhere. So when I was running IBM Security, I led the acquisition of Trusteer, which was a pretty big acquisition here. And as you said, the great thing about Israeli entrepreneurs in general is just the directness. So we talk about being directness. That's the great thing about Israeli entrepreneurs. And the challenge with Israeli entrepreneurs is just the directness. I mean, it's a big challenge. In general, actually, I have to say, the experience that I have had in terms of the quality of the people and the directness, which really is a talent, actually, is to hear people speak very assertively about why they believe in a space and how they're going to get to market is a huge, huge advantage. So I think there's a great work ethic. There's a great directness. I would say the area to watch out for is what I touched on earlier, is this go-to-market question. There really is a chasm between here and the United States and the complexity of selling here and the complexity of selling in Europe. It's not unique to Israeli. It's not unique, actually, because it's true of any entrepreneur. that they feel they've invented this beautiful product and they've met a certain number of customers who've installed it and had it successfully installed, and then somebody in Southwest California can't install it, can't explain it to the customer, and can't get it in, and so that person must be a total idiot, right? And so unfortunately that's just not the case. There's just a whole set of objections between this beautiful thing, which everybody should be able to use, and the experience of a mere mortal who happens to be a sales engineer sitting, and working with customers in Southern California. There's a whole immense set of things that have to happen. And if there's one, it's a challenge for all entrepreneurs, but it is the biggest challenge given the geographic constraints. In some ways, the directness to be, no, you're not smart enough, you're not good enough, you should be able to do this. There's something wrong with my sales force, I'm going to fire them. That is the thing to watch out for. Go to market, go to market. You just have to have amazing people with you who've done it before.
I actually think that's exactly right, and I'd maybe add to that. I think the challenge, and I mean, almost, I can't think any deal we've done in Israel, this hasn't been the case, where the development engineering team stays here, which makes a tremendous amount of sense. The challenge is then when you start building your go-to-market team, you really run the risk of having a disconnect between a U.S., if it's a U.S.-based company, a U.S.-based or go-to-market team, and the Israeli development team. And I think Twistlock, frankly, is a great example of the right way to do it. Ben went out and recruited a CTO in the United States, which is fairly uncommon for Israeli companies. But from day one, the first time I met with him, he just made it very clear that he treasured the team he had here, and he had no plans to ever change that. But he needed that team to be engaged from a go-to-market perspective from day one, and to really do what Brendan just talked about, or not do sort of the opposite, is really trust that team out in the market selling for you in another country knows what they're talking about when they come back and are giving you feedback. I have a very close friend who took a role at a $70 million plus revenue business, Israeli-based company, to run all their go-to-market work in the United States. He stayed 6 months. He called me up and he said, I finally got sick and tired of having to answer the same question again when I know the customer. I've sold them 20 products over the last 20 years. It can be really hard. And I think that the smart, I would have said smart and stubborn. And obviously smart's almost always good. Stubborn is often very good. And stubborn in a way that what I found my first time coming here for work was 20 years ago. And the advice I got was they're going to challenge you like crazy because you're young and you don't know anything. The minute you prove that you do know what you're talking about, they'll embrace you and work with you closely. And I've seen that with really every entrepreneur we've had a chance to work with. Intelligently pushing back until they really see what you can bring to the table and then embracing that. Again, I think Ben at Twistlock is a great example of somebody who sees what each person around the table can do and bring, knows what to expect from them, and knows how to engage. So you cannot underscore it more than possible. This go-to-market stuff and getting it right outside of Israel is just absolutely critical. And you're going to have to answer your own question on this one, by the way.
I'll defer to Chris Thomas.
I was just going to ask, how many people in the crowd are entrepreneurs? You are some of the most tenacious and dogged entrepreneurs in the world. And it cuts both ways. And you can say, well, all entrepreneurs are that way. You look at the Valley, you look at Boston, you look at major metro areas in Europe. It's not the way. There's a special sauce here in terms of how much you are leaning in and how hard you are working and how much you are striving, not only to succeed in this market, but around the world. And it's inspiring, and you guys should be proud of that. But I mean, it's unique. It's truly unique.
All right, I will answer it, but very briefly because I'm not allowed to talk too much. But what I will say is, and I live in the United States and I work in security, and I go to Switzerland to get a watch, and I go to Israel to get cybersecurity. And I think that finally in America, I think Fortune 5,000 companies, CISOs, Chief Information Security Officers, believe the same thing. And so, that combined with the fact that, Chris's point that you guys are such great entrepreneurs, is basically a recipe for success. But what you do have to make sure is that when you do go to your markets to sell, whether that's the US, Europe, China, wherever it is you're selling, you're not selling in Israel probably because the market's so small, but whenever you go to those markets, you got to make sure that you understand those markets. And one way of doing that is recruiting great investors that can kind of help you walk through the path, and additional independent board members that can be very helpful. All right, let's talk about security a little bit. So 2 points. I'm going to say two things, and then I'd love to get some reactions. So allegedly, there's a shortage of between 1 and 2 million cybersecurity professionals globally. The U.S. is the most needy market in that respect. Maybe half those people are missing in the U.S. So that's a problem. How are we addressing that? I'll let maybe Charles talk about BugCrowd if he wants to plug that, or anybody else who wants to talk about that problem. The other thing is the Equifax hack, which is still shocking, still reverberating globally. Did that change anything? Some reactions to that?
Yeah, well, so first, I think the $1 million to $2 million person number is probably true. It's actually worse than that, though, because there's a meaningful percentage of people who work in the security teams within large enterprises who, frankly, aren't qualified for the roles that they're in. There aren't enough bodies to fill these critical roles, and so they're having to put people in positions where you see the number of misconfigurations within systems. You pay millions of dollars for these security systems, but then you don't know how to set them up, you don't know how to track them, you don't know how to make sure they're working. So I think the problem is even worse than that, and it's not a solvable issue in terms of there just aren't going to suddenly be 1 million people who show up, and the need is getting bigger. BugCrowd, which I won't really plug, but if you probably haven't heard of it. If you have, it's a crowdsourced security model. Effectively, they have 70 or 80,000 people, researchers around the world, who work on the platform. And what they're doing is they're working on either public bug bounty programs or private programs for a number of companies in the Fortune 500 to help identify vulnerabilities from the outside that they're not finding from the inside. We think this is an important approach, not just with BugCrowd, but in general, in that offensive security, and for those of you who've worked in that, I'm sure there's some in the crowd here, people think very differently about how to attack systems than how to defend them. And if you're building cybersecurity platforms to defend and you don't understand how the mind of the attacker works or how their systems work or how they team, you're really missing a lot of what needs to be done. So we think that the people shortage is huge and getting bigger. Equifax, I don't know that there's going to be anything learned from it because we've seen so many of these now. I'm jaded to it, but within a few months, I think we'll be on to the next one, and the government will have their day calling everyone in front of them and yelling at them and firing the CEO. But ultimately, I don't see that there's this wholesale movement to change what people are doing, just like we didn't see with Target, just like we didn't see when the government released a bunch of private information about the government employees. I wish I could say there's going to be some defining moment, but I don't think it's going to be it.
I would say as well with Equifax, it's not like there was a technology problem or even a technology solution to that problem. It was unconscionable what happened. Their teams, and I knew the previous CISO of Equifax, and as I understand it, and sold technology to Equifax from the previous CISO, that would not have happened. My understanding about how he ran that operation, so it shouldn't have happened. And so what that speaks to is what Charles also spoke to, which you can have, if you're innovating in cybersecurity, and you may have something where you have split the atom, and it's just unbelievable. But it requires 15 engineers to set it up and to maintain it, then it is not going to be successful in this space for the problem that you're just describing. The positioning of it is just too complicated. We need solutions which are consumable by mere mortals. And those solutions have to be closer to the actual applications we're trying to secure. And so, many of us here, except for Chris, we're all involved in Twistlog. Twistlog is an example of a company which can deliver security closer to the application, closer to a microservice, and deliver a type of solution that, quite honestly, you require 15 different products to deliver in a traditional enterprise network, WAF, appliance, firewall, IPS, QRadar, analytics tool way. So we need whole new ways of doing things which are simple and more consumable by mere mortals. And honestly, companies who can innovate in that way, they will have a much greater chance of success.
On the Equifax issue, I think for a long time people have thought regulation, compliance will drive adoption of new things. And, we had state data breach laws. We started with 10, and then we were up to 30, and then we were up to 40. And different states had breach laws, and you had to notify and fine. And now all the world's got them coming, and GDPR, and everybody, you got to notify in 72 hours and whatnot. And, I think a lot of people thought that would drive sort of better security adoption, and it really, unfortunately, hasn't. The thing that I think drives boards to deploy more innovative security is the damage that's done to their brands, the loss of trust in the customer base. When we were doing lost laptops, which is sort of an old form, sort of a cute version of a data breach where you only lose like a small database of people's stuff in a laptop in a rental car back in 2005, when it wasn't attached to the internet, that we used to sell laptop encryption, and if your laptop was encrypted, you didn't have to notify the data breach. Today, unfortunately, those are 3 billions or 150 million, not 25,000 people in a database. And even back when we were watching 25,000 records get lost, it wasn't the fine they had to pay to the state. It wasn't the cost of mailing. It wasn't the cost of buying LifeLock for the people that were affected. It was how many people, if you were a bank, saw that in the headline and went out and opened an account at a different bank. I mean, how many people will ever go to Equifax again? They may have suffered irreparable brand damage, in that core business right now. And I think those are the things that are slowly changing sort of on that. On the skills issue, the nice thing about, we have a lot of entrepreneurs in the room and we sell to the IT stack. I mean, sort of an interesting question. In 5 years, it's 1 to 2 million. I think we may be, 20 million jobs short in cyber. Cyber's the new it. 10 years ago, 20 years ago, digitization, computer science, hottest areas in the world. If you could hack CS, my dad told me, if you can code, learn how to take computer science. Today, that's cybersecurity. Every single job in IT, what isn't going to be touched by security? Mobile, cloud, networking, auto, medical devices, they all have an element of cyber. If you look out 2, 3, 5, 10 years, it's going to be the people who have the cyber mindset and the cyber skill. They're going to be able to learn the easier tech stuff and are going to be moved into positions of great advantage. I actually think cyber is the it skill, and it can be taken in a lot of directions over the next years. And when I look at that, I think virtually every IT job is going to have an element of cyber, and I think we are way short on training and skills in all of those areas.
Just one comment I want to double tap is the impact on brand, because I think that's really important. When we think about mobility and auto tech in particular, most of these companies are not making these investments for offensive reasons, which is sad, to be frank. They're doing it for defensive reasons because the recall risk, the amount of cost for that recall, everything that goes into a breach of those assets in a huge way is not only going to impact them on a quarterly or an annual basis, it's going to impact the brand that every driver either drives on their steering wheel or will see when in their autonomous vehicle staring in front of them every day. And I'd posit to you that 25% of the global OEMs, the auto OEMs that exist today, will not exist in 10 years. And they won't exist because of poor production, poor operations, or they've been acquired by other companies. But brand protection of cyber is going to be a huge part of how people think of those assets and think of the systems that mobility is evolving toward.
Great. So this is going to be my last question before opening it up for Q&A. So I'd love Chris Thomas to actually tell us not about security, but tell us about the hot areas in mobility, in autonomous vehicles, etc. And I'd love the other panelists to tell us about what are some of the hot areas in security that they're seeing. We can start whichever way you guys like.
Yeah, so I think it's important when you think about mobility. Many people hear mobility now and they think autonomy, and that's mobility, or systemic mobility, systemic transportation, multimodal, and they think about it from a land-based logistics perspective. Mobility is incredibly broad, and the opportunities across all the TAMs of air, land, and sea autonomy, holistic robotics, warehousing, better logistics systems from a long-haul, short-haul, mid-haul perspective, optimization of underbelly of passenger airlines for cargo. These things don't come to mind when people talk about the mobility buzz right now, but that is mobility. It's incredibly big. We had 2 exits last year. One was geometric intelligence, an early-stage AI business out of NYU. We were the only institutional investor in that business, acquired by Uber as a kernel to stand up their AI division. And after that was acquired, I got a lot of calls from friends and people in the industry saying, Chris, 1, how did you find this company? And 2, how did you know they'd be acquired by a transportation company, a mobility company? And I took a lot of pride in that question because we're looking at those thematics. An AI company can be a mobility company. The other one was one of the largest fleet telematics businesses in the United States, a $900 million acquisition by Verizon that's rolling up that space in the North American market as well as around the world. But mobility is big. And then with regard to autonomy, I think there's some key themes that I would focus on right now. One is going to be full stack autonomy within the decision-making layer. And so we're investors, and I sit on the board of a company called Nutonomy. They're solving autonomy in the most difficult problem set. asymmetric urban centers with humans, construction, differentiated environments, venues that are coming and going. How do you have a safe vehicle in those environments that's not only working alongside all autonomous vehicles, but it has the fly in the ointment of the human driver as well, which we're going to have and we should have for many decades, but those are real problems we have to solve. I think the perception layer is incredibly interesting right now. We hear a lot of buzz about LiDAR, but LiDAR, radar, vision, how that sensor fusion is taking place, what's the optimal hardware component set for an individual autonomous assets, all those things are going to be really exciting, and I think there's a lot more forward-going evolution of those technologies that we're going to see. Some people will say, well, look at the investments we've seen in the Innoviz of the world from a variety of tier one automakers in the North American market. I promise you, I've looked at 50 plus LiDAR companies. There's a lot of innovation going on around the world, and that's going to continue. So I think you guys that are developing for that market, it's still, open running. It's still an exciting space. And last but not least, I think mapping in general, especially HD deep maps from a spatial overlay perspective in individual cities. That has a wick on it, which is important to understand. When you have the OEMs, which will have autonomous sensor-laden vehicles that are deployed around the world in the very near term, their ability to have their own mapping platform is going to be very real. So what's the shelf time of a company that's focused uniquely on mapping unless they can figure out how to monetize new opportunities in mobility across different environments? But those are the ones that we're spending a lot of time on right now, and I promise you there's a tremendous amount of opportunity in terms of what people are looking for. And people sometimes ask me, how should I think of Detroit and all the automakers that are there? And what I would offer to you is, you should think that they're more strategic than you're giving them credit for, but they're also incredibly more fearful than they show. And that's good for any entrepreneur that's looking to develop into this space because they're looking for partners. They need you to remain relevant around the world.
Excellent.
I'm going to have Alex. I'm taking notes from Alex on what he's investing in cyber, and then I'll fill in what he doesn't say.
Thanks,
Come on,
Charles.
Alex.
I'll say one theme.
You all have always asked this question wherever we go, just because he's trying to get ideas.
That's
the only
right.
reason.
What's your next hot one? Yeah. A theme we like actually. So I'll describe it this way: lots of data, huge data. We're capturing data everywhere now. We didn't used to be able to capture data. Then we started looking at data and looking through patterns in data, and then we ran stochastic models. Now we're running. What's the big buzzword? AI. But so if you look at the logical extension of, and AI doesn't work because it's new math, right? We've been running math on things like malware detection and network security and the SOC and the SIM log. We've been running math and doing pretty good decisioning with basic regression analysis and operations research type math for a while. What's happened that I don't think is part of the AI story enough is the amount of data we're capturing. The data has exploded. And the data exploding, the amounts we have now with self-trained models, we have investments in Cylance on the endpoint, Darktrace in the network, JASK doing it in the SOC. Those are just three areas where we see that theme of huge new amounts of data. But the data is actually creating new signal. It's creating signal that we didn't have before we had all the data. And I think that is a major theme that I think can run across a lot of areas in cyber. So, of the 20 areas of cyber, who's doing AI in the industrial control system space or the IoT for the industrial side of IoT? Who's applying AI to that? Who's applying AI really to security analytics, not just the log files and doing deterministic stuff? Who's finding new signal with sort of things like AI? I think that pattern and the areas that can be applied in cyber is something that we as a firm really enjoy. I'll plug one more time to the skills gap. We just invested in sort of a training enablement and training in a hot area. Sort of, there's been an area in cyber that's gotten a lot of attention in this area is anti-phishing. So you're going to train your employee base with. There's a couple of companies in Israel. There's a couple in the U.S. It's probably the area that's furthest along in sort of. It's a gamification or training. You run drills and run fake phishing ads into your employee base. And your employee base gets smarter about what they are and aren't clicking. That sort of training, sort of gamification of training, I think that has large-scale applicability in a lot of areas to get the employees and get the technical employees more trained up on cyber. So those are some areas that we like.
I would say so. I agree with Alex on AI, machine learning, neural application, neural networks to security data. Clearly, there's tons of opportunities there, and it's just don't focus on the technology. It's the outcome. How are you going to improve an outcome for a particular problem in security, whether it be in the SOC or whether it be in malware detection. Another area, just more generally, is applications are developed entirely differently now than they were just a few years ago. So a few years ago, we all grew up, well, I grew up anyway, waterfall development model, requirements analysis, build the software, and you go through this whole thing. It gets deployed in a data center, and everybody surrounds it with piles of appliances and does all that stuff. And now it's developed in a DevOps mindset. It's developed, applications are developed in an agile way. Features are released daily. Many of you are doing this in your own companies. And then, of course, these solutions are deployed on the cloud or deployed in a totally different way. So security solutions around that new way of doing business and new ways of deploying and using the cloud, obviously, that's an area where there's still much work to be done. I mean, Twistlock plays there, but there's still much work to be done there. There's still interesting things happening there in application security, giving developers more control of security. So that's an area I'm interested in.
Yeah, I'd tie those. I mean, the skills gap is never going away, and as Alex said, but I think the fact is that the reason security has become such a bigger issue or challenge is that technology is just so much more pervasive. Right? 10 years ago, we would not have been sitting here talking about automotive from a technology perspective, but virtually every job in the white-collar world certainly involves technology, not just daily, but sort of all day. And then that's just white-collar. The reality is most manufacturing, all of these roles, increasingly, technology plays a critical role in that. And what you're seeing still is this expectation that security is the responsibility of some small team of people in an organization, but it's not. It's the responsibility of everybody in the organization, whether they're software developers, whether they're someone who's answering emails or reading emails. And so we're seeing kind of this broadening base of how do you get people to get a security mindset outside of the security world. Software development is an obvious area. You look at the IoT devices and the consumer IoT devices where they truly don't even care about security. It's not their problem. If the device gets hacked, it's your problem, right? At the end of the day, if it's not the company's problem is providing you that technology, if it's not going to be a brand issue, it's your issue, not theirs. Why would they spend money on it? That's a terrible mindset. But frankly, if you walk around Silicon Valley and talk to people outside of cyber, that's how they actually are thinking. They're not going to admit that, but they don't do much. I do think that the other issue, the phishing piece, I wish social engineering had a big market that people were going after. Currently, it seems to all be training. I personally think the training market is boring from an investment perspective, so I'm looking forward to hearing what Alex has funded, so it must be better. But we're seeing improvements, and there's a company here in Israel called Iron Scales that we talked to a while ago. I liked some of the stuff they were doing, but this idea that if you have 30,000 employees in your organization, there's no way you're going to get perfect adherence to whatever rules you want to set, and you shouldn't expect it. If someone gets hired in a $30,000 a year job and they're working on systems where someone spends all day, every day trying to figure out how to trick them to do something they're not supposed to do, you can't honestly think it's that employee's fault they got it wrong. You've got to figure out other ways to address the problem more holistically across organizations. Training certainly plays a role, but frankly, it's an area that we have been begging people to go start things in, and we have yet to see something that's really hit the meter for us in terms of what we'd fund. And I've tried as hard as I can and keep trying, because I think if we can start to address the social engineering component, it covers a lot of the other issues that we're seeing in security.
So there are some ideas for you guys for startups. Does anybody have a question for the panelists? There we go.
Thank you for a very interesting talk. You were starting talking about actually partners. I'm an entrepreneur and I'm actually looking for a business partner for go-to-market strategy, and I know that I pretty much reached my ceiling. I'm an industrial designer. I have a line of 28 medical devices for people with disabilities and fractures and stuff like that in the orthopedic area. And I'm currently looking for a business partner, and I don't know what kind of skills exactly I have to look for, because there are so many skills that I need in a partner. I don't know who to look, where to look, and I'm kind of wondering if I should get someone that is specialist in medical devices, or someone that is specialist in marketing and sales, or someone that is specialist in the areas that I want to penetrate into. Or there are so many options that kind of confuses me, and I'm really struggling to And I want someone that will get in the company and I don't want an investor that will put the money and go away. I want a partner that will work with me and make this company a billion-dollar company that it can be, because I have a disruptive product. So I don't know how to go on from here.
Are you looking for a business partner to work at the company with you, or an investor? Okay, that's what I thought.
Any feedback for finding a good business-oriented partner?
Well, I will say first, absolutely, you want someone in the medical device space, and that's specific to the space you're in. There are so many specific nuances in selling in that market, and this is speaking from the U.S. perspective. But if you bring someone in who's great at sales and marketing, but doesn't understand how the FDA process works, how to work with partners leading into that process, you'll never get anywhere. But to be honest, I would recommend, based on what you said, instead of going to find a partner right now, I would go out and try to find people who you know and trust, who work in the market, to be advisors, and have them give you the hardest feedback they can about what you need, where the skills are lacking, what you need to build. And I would use that information to build a model for who you want to go find. And then I would ask those exact same people, who do you know who you can bring in? Because you can go meet 10 people over coffee and spend months getting to know them. Unless you have that map already created from other people who've helped you build it in terms of what you need, I think you just run the risk of bringing the wrong person in, especially when it comes to someone who's really supposed to go to market. That would be my view. But again, specific to your space, I would focus around that market.
Any other questions? Oh, Chris,
I would just say I would give a similar answer. The only thing I would offer is that I think you want to find, as a young entrepreneur, you're wearing so many hats. And so you don't want to find someone that's just like you. You want to find someone that brings many of the same attributes and that are excited about this space like you are, but that brings other things to bear. And ideally that comes from your network. But as an early stage entrepreneur, you're going to be working like crazy and sacrificing other aspects of your life. And who's someone that you want to spend 20 hours a day with to build something like that, to put your entire self into? I think sometimes we give short shrift to that aspect of the personality of the entrepreneur early on. And you could have someone with great CVs, but if there's not that fit, if there's not that drive for something, it's inevitably not going to work or not work out the way you thought.
Great answer. Any other questions? Here.
Thank you. Thank you for the great panelists. I have a question around the geographic location of the management team, of the executive team of startups. I would like to hear your position on this issue. I know that there's a spectrum of options ranging between moving all the or practically all possible management team to typically the US, and leaving only the very critical, R&D management in Israel, versus keeping all the management team in Israel and just delegating the sales and marketing and or biz dev to the US. I know that some VCs mandate that the executive team be relocated to the US on one hand. On the other hand, looking back at some of the most successful cybersecurity companies in Israel, I see at least that there are a lot of them, the majority I'd say, have surprisingly have their whole management all possible management functions in Israel. So I'd love to hear your opinion about this. Thank you.
My view is obviously to go to market, it has to be where the market is. And so part of the answer to that question also then depends on, there's no one answer for a company actually. I know when I built our company, Q1 Labs, I was in Boston, the engineering team was in Canada actually. And, essentially all the management team ended up being in Boston. Product management, go-to-market, sales, finance, everything. It worked really well. We had a super relationship. A lot of it is depending upon the relationship between the CEO and the go-to-market people. And then what we also spoke about there as well, which is the product management teams and the engineering teams. If they are very outward facing and spending a lot of time in markets, then people could be successful with those teams based locally. But I would say extra super efforts have to be made in that case. Does the CEO have to relocate? I think it helps, quite honestly. I think it helps a lot. And if you look at Trusteer, the success at Trusteer there's a unique combination there, because you've got Mickey and Rakesh, and you got Rakesh stateside, who's very senior, and then you got Mickey here, and that's the magic combination. So whether that person is a VP of sales, a CEO, or in Rakesh's case, a president, but that's the combination you need. You need somebody very strong in both places.
Yeah, I would add it. So from the VC side, I think there's a stronger approach that writes it into a term sheet. You will do this, and I guess I would sort of say, we were talking about pick a partner earlier. We don't write, and I think a lot of the people here don't write in term sheets. You will do this. There's supposed to be conversations, right? There's clearly what's best for the business, and Brendan was sort of going down that path. You need the key things covered. I mean, one of the great characteristics that I've seen in successful companies is one of the things you can measure about a company, a successful company, versus those that aren't very early, is the feedback cycles from early customers to the engineering teams, right? And the rate that code flows, the rate that features flow down to early customers, and the rate that those customers' feedback comes back up. And if it's if there's already a 10-hour time change naturally to your market, and then if it's exacerbated, so sometimes geography has nothing to do with it. PGP was located in Palo Alto, and we had sales on the third floor and engineering on the second floor. And I assure you, they were a lot further apart some days than Israel to San Francisco. Just 12 steps up the stairs, people didn't go between the flights of stairs. A big thing about it, what you have to do is have a culture where sales and engineering are playing the right roles and shortening cycle times, getting critical early feedback from those customers. And you don't do everything every customer ever wants. You don't go down this path. You probably shouldn't be signing term sheets that say from a partner, you will do this. I think they should be having a conversation with you. Hey, we think it'd be great we think the market for your business is in the United States. How are we going to cover the go-to-market side in the United States? Ultimately, people have a life, right? And you can't have a successful entrepreneur, I say, if they don't have their home life stable. They're not going to be a successful CEO or a successful VP of sales. You have a wife, you have children, you're a brother, you're a mother, you're a sister, you're a father. All those things have to be sort of set in a person's life. The company can be built around any situation there. And I think that's sort of the right way to think about it. Having said that, you can't have key pieces for the company not covered. You got to work around it.
Great answers. Any other questions? Here.
Again, thank you for the great input. In relation to the other question, preparing to relocate to the US, what are the crises I should watch out for, the things that I should really be minded for? Never been there, never lived there, never worked there, coming as a native Israeli.
You're going to meet amazingly nice people in the Midwest. I highly recommend going there.
I completely agree.
But be wary, because it'll seem like they're just being a little too nice, but they're actually that nice. So.
Any other comments?
I would say, I would go spend a good bit of time there if you haven't been there, or if you're thinking about relocating there, and if you're married, I would highly recommend take a 3-week trip, bring your family, go visit a few places. Ideally, you probably have friends who live there. Go spend time and learn about it. Decide, is this really going to be for me? The last thing you want to do is get there and 6 months later say, you know what, I regret having done this. And if I'd known I wasn't going to do this, that's fine. I would have done something fundamentally different in terms of how I thought about putting my business together. It's a fundamentally major decision. And so I would just invest the time and energy to make sure it's going to be the right thing. And then wherever you go, that it's the place your family's most excited to be. To Alex's point, And we'll back companies wherever they happen to be based. We're mostly U.S. based, but like I said, we've done Israeli deals too. I would rather have the team be. I personally think the team should be together. Ideally, it's not always the case. Wherever that is, fine, but figure out where that's going to be and locate there.
Talk to Israeli entrepreneurs who have moved to the city you're moving in.
Yeah.
I think some of the really good advice, sort of the non-obvious advice, came from people who are doing exactly what you did a year ago. And they already sort of went through some of it. Get some introductions from investors, find people that you know that are moving to the same city in the United States. They will, I think, give you the most genuine, authentic answers that you may not get from everyone, is what we found.
The only other advice I'd give is don't just go to Boston and San Francisco. And they're lovely cities, and I love going there. But go and there's communities in every
New York too.
And New York. New York's a wonderful city. It's it's the best. But go to Milwaukee. Go to Detroit. I highly recommend it. There's an amazing community there of tech entrepreneurs. And when you talk about what are you looking for, obviously there's certain cities that just offer developers in droves. But if you're looking for bang for your buck and the ability to have amazing logistical support and a lot of people that want to help, those communities exist all throughout the country. And it's special when you get to those small cities that most people just don't take time to visit.
Only thing I want to add, just from experience, is that the decision, if you're a man and you're married, the decision is really your wife's. If you're a woman and you're married, I don't know, but I can tell you that for a man, it's the wife who decides where you end up going in the U.S. Any other questions?
Hi, thank you for the excellent insight. I have a question regarding blockchain. You mentioned, for example, the twist lock with the container security, which makes sense for the CISO to replace WAF and IPS and others. Can you give specific use case for blockchain security, for security software? Any specific use case that CISO can adapt and use that for?
So it is. So I've actually, just out of my own personal interest, spent a lot of time looking at blockchain. So blockchain is obviously, it's got its own little bubble happening over here to the side. It's mostly related to financial services. It's mostly related to new currencies. And it is extraordinarily interesting, but it's kind of like a TCP/IP stack. It's like saying, what are the use cases for TCP/IP 20 years ago? So there's mechanisms for establishing trust, and there are many different use cases, all of which have a security component. And at the end of the day, blockchain is all about trust. And so trust is an inherent part of it. When you're talking about trust, we're talking about security. They're just inherently about it. So if we look at things like, some of the use cases are, tracking the origination of diamonds, for example. There's great use cases of that. There's actually incredible use cases in 2 European states. Estonia, I think, is one of them, for the entire citizen framework is based off of blockchain, and their entire identity infrastructure is based off of blockchain. Now, they had the benefit of having basically an extraordinarily backward infrastructure, and they went all in with blockchain. So I actually think there's good applications in the area of chain for other identity solutions. I also think there's a lot of hype around blockchain that I would be cautious of, because it's a building block technology, and it's like analytics and AI. The question is, what's the problem you're going to solve? Is it tracking the origination of something? Is it delivering trust and identity? That second one is intriguing with blockchain.
Let's do 2 last questions, and then we get to drink again. Right there. Just be loud.
Okay. You touched upon 4 topics that I want to combine into one question. You talked about Israeli entrepreneurs doing sometimes legal stuff. You talked about specific domains, mainly in cybersecurity. And you talked about the friction that sometimes happens between the investor and the entrepreneur. You also mentioned the skill set, that sometimes entrepreneurs lack the skill set. They're not able to scale it up as the company grows. How do you manage that friction? And sometimes it's time to say to the entrepreneur, goodbye. You can be an amazing productivity manager, a good CTO, but you may not scale up as a CEO. How do you manage that discussion with the entrepreneur?
That's a tricky one to answer.
I'll take it.
Good man.
So, and I would actually make it even more difficult. I wouldn't call it stepping up. I would say let's assume the entrepreneur is the CEO, so they're being moved out of the role as opposed to scaling up. Frankly, this goes back to value add, and it goes back to what I said earlier about not always having the most popular things to say, but having things to say that you think are valuable to the company and the entrepreneur. It's also all about having those tough conversations up front. So I have that conversation with everybody we back. Whether they've been a CEO multiple times or they've never started a company before. And it is one of the most useful components for me of due diligence and getting to know that person. So there are certain things I'll see, and I won't lay out what they are, but there are certain things I'll hear where I just know it functionally won't work, because ultimately, if they are not successful in the role, they won't be able to see it themselves. Usually that's not the case. But it's long conversations about, here's what I'm observing. I mean, going back to your question about who to take as a co-founder, what are the things that I don't have a skill set for where I could really use help? Those are the same things that are likely going to make you unable to scale long-term as a CEO. And I describe the scaling function for a CEO as it's not this linear scale that accelerates with growth. It is a whole series of big step functions. And as you go faster and grow bigger, those step functions get larger and they come quicker. And if you don't clear a step, you don't get a chance to crawl over it or roll up the ramp. You hit the wall and you missed it. If you haven't identified before you come to that step that you're going to miss it, it's not even your fault if you're not having those conversations. So honestly, it is a nonstop conversation from before we fund the company all the way through to whatever point it is, whether it's an exit or whether it's part of that. We just had a CEO go out and recruit his replacement after 4 years. He built the company to 100 people, phenomenal business, raised multiple rounds of financing. He came to me at the end of last year and said, next year, we have to get a new CEO. Next year is the year that I don't think I'm going to scale past it. I can still do it, but the company will slow down if I'm running the company. To me, that was a success in that we had been having that discussion for 3 years, and he was looking for the signs. So I think it's just, if you can't do that as an investor, if you can't have that conversation, you should not be in this business. And I see a lot of people who frankly aren't willing or comfortable having that conversation, and they're doing a massive disservice to every company they back.
And if it's a good, as Charles says, if it's a good relationship up front, that it's something that everybody's having and talking about pretty much all the time. So it's not some big secret. I mean, that's the worst possible scenario, is you have a group of your partners who are essentially talking behind your back about your potential future and as an entrepreneur, and then you just get suddenly surprised. That should not be, there should be no surprise. Great partners aren't basically, holding the wheel. They're constantly giving you feedback, you're receiving feedback, but actually as an operator, I have to be really careful not to grab the wheel, actually. Because then all of a sudden, it's kind of like, oh, you own that now. Well, I don't own it. I'm just basically trying to give you direction, or the CEO. But if you're giving that direction and the CEO is the wheel, and every now and then they're banging into the guardrail, well, they'll start to see, okay, that's not working, that's not working, that's not working. And then eventually, if it's a really good person, they themselves will recognize, and if they love their company, they'll recognize, I need help. So that should be a natural thing. It's not easy, but...
Real quick on that, the other thing, though, is if you're having those conversations, it's not necessarily hey, I'm predicting in 2 years you're going to fail. The value of those conversations is, what can you do next to get that next step clear? What are the things you can go learn? Can you go find a mentor? Is there someone who should be helping you? Maybe it's about recruiting because you've never had to recruit before. And I think you really can. And I think this is frankly the case with Brendan. If you look at his background, if you can get someone like that involved in your company as the CEO, you've just increased the odds of you personally succeeding as the CEO by a huge margin, because you've actually taken the step to bring someone around the table who is probably much better at your job than you are, but doesn't want your job. They just want you to succeed. And if you can embrace that, and going back to the stubborn comment, frankly, I don't think it's any harder. I think in some ways it's easier with Israeli founders because, like I said before, they may be stubborn on the front end, but once there's that relationship of trust and they know what value you're bringing, they'll embrace it and take every piece of feedback that you can give them that's valid. It's a lot easier when it then comes to a difficult conversation if you've built that relationship.
Yeah, I would just say, Charles said something that's super. The exciting thing is if you've got something and it starts to grow, you've this amazing opportunity at every stage to hire people who are smarter than you. and that you basically go, oh my God, I'm going to learn from this person every day of the week. That's true of your marketing person, your salesperson, your engineers, and you go, oh my God, this is unbelievable. I've got all this entire team and they're all smarter than me. And then you can do the same with your investors. And that is the trick for successful people. They just surround themselves with amazingly successful people.
And there'll be lots of moments when you think you're smarter than your investors, so don't feel bad about that. The only other thing I'd add is it depends on what you're stubborn for. And what I mean by that, in a prior life I was in the U.S. Army, and there's an adage that the best leaders are the best followers. And the takeaway from there is that the best leader is going to always do its best for his team. So it doesn't matter if you own 100% of a donut, you want to own 5% of a billion-dollar company. And so if you're always making choices that's in the best interest of your company, if you're stepping up or stepping back, you're going to do well by yourself, you're going to do well by your team, you're going to do well by your company. And if you always kind of focus on what you're being stubborn about, what's your mission, what do you care about? If you always try to come back to, to that focus, you're going to do well.
That was great. Maybe one last question. Yeah.
I think it's a bubble, and I think when it bursts, it's going to be spectacular to watch.
It'll make a good movie, right?
It hopefully doesn't even get that far. No, I mean it's idiotic right now what's going on, and what I mean by that is you have companies that were literally failing businesses who have not changed their business, but now they're going to raise an ICO and they've raised a bunch of money. Guess what? They're still going to fail. The business model still sucks. And the only reason it's happening right now is because there's been such a massive uplift in the value of Bitcoin that if you're sitting in Bitcoin and you've decided you want to have a bunch of money at risk in the cryptocurrencies, people think they're spreading the risk, which is really kind of funny. You're just chasing the next tulip. And that's fine, right? Because as long as that keeps happening, if you time it well, and the best investor I know in Bitcoin is a bartender in Hawaii who's a close personal friend who's now made over $1 million jumping across currencies. He's out completely now. Maybe he's too early. I don't know. But honestly, I think it's a crazy wave. Power to the people who go raise $200 million and then have to go actually build a business who have no investors around the table, who you have no control over what they do. There are multiple of those companies who've already bought their jets. They're Swiss domiciled, all of them. They already own their private jets thanks to the ICO money. I think it's crazy. I hope one of you disagrees because this will be a fun conversation.
I like that answer. That was good.
I think it's crazy, and they don't know at the end of the day, there is somebody on the other side of that transaction. And I don't know who the hell that is. Is that some Mexican drug lord? I mean, I have no clue. So who do you want invested as your partner in your special company? So, I mean, it's...
Now, we're doing one, but that's a totally separate thing.
I'm not going to defend ICOs either. I agree with everything up there. The legitimate use case for them, it's not a funding model. I mean, if you look at loyalty programs, right? Take ICOs and sort of converge them in your mind 3, 5, 10 years out with an airline frequent flyer program or a loyalty program. I think that's where they end. The United Airlines, Star Alliance, or whatever, the bank frequent flyer program, it's not going to be 12 times the value of the underlying airline business, right? Or 50 times the value. It's going to be 5% of the business should be sort of there. It's a nice loyalty way and I think that's where ICOs will trend over time. I think they'll fail as a funding mechanism, as we talked about. And I think, loyalty programs will be sort of a nice use of the blockchain that someone was asking earlier, but it'll be not as a funding mechanism for your company.
Great. So before we wrap up, I'd like to thank 6 people, not 4 people, but 6 people. So bear with me while I name all these people. So I'd like to thank the panelists, Charles, Chris, Brandon, and Alex. And I also want to thank 2 more people who made this happen in such a beautiful way, and that's Sharon and Nitzan from Wild Ventures. Thank you, everyone.